Welcome to Investible Partnerships, where we talk to industry leaders about growing revenue-generating partnerships. I'm your host, Des Russell, and co-founder of Partner Elevate. And the daily battle for partner success is forcing channel leaders to rethink how to maximize their relevance and value so they can be a driver of partner impact. So let's jump in and find out how. Hey Jay, welcome to the Investible Partnerships podcast. It's so good to have you here. It's a busy time. I know you're on a plane all over the world, a busy time in our industry. And I think it's taken about 5 months for us to actually link time zones and calendars. So I'm certainly appreciative of you being here and sharing this conversation with our audience who are channel and ecosystem leaders looking to be drivers of partner impact. So for my audience, I don't think I need to give an introduction to Jay, but there is a respect that I'm going to pay to Jay. Jay McBain is a leading analyst at Canalys, and from Jay's perspective, what I love about Jay and what he's putting through for our community is this thought leadership, this visionary thinking grounded by data and insights. And I think it's the data and insights that really illuminate the visionary thinking and what's actually going on in our industry. So Jay, thank you so much for being part of our industry. And I'd love to give the opportunity for you to tell our audience a little bit about yourself, but I want to do it with a little bit of a twist. And that is really about share with us what you've been most passionate about that you're working on lately.
Sure. So just about me, I've been around the channel partnerships for over 30 years now. I look at them from all angles, but there's two altitudes that really fascinate me and wake me up in the morning. One is, the predicting the future, declaring the decade of the ecosystem, watching as the platform economy takes shape, watching as our buyer changes demographically this year, watching the end of the cookie, really, ground shifting trends that all come together to make or break kind of winners and losers in this industry. The other one is landing the plane. I don't really do much in the middle, frameworks, templates, and stuff that belong on PowerPoint slides with, smart people building these as consultants. Landing the plane is let's surround the buyer. Let's figure out who the 7 trusted partners are. Let's figure out the millions of companies that are competing to get into those 7 spots. Let's look at the tens of millions of people that make up the partner channel in total, the ecosystem, and look at the 10 million people who work at vendors and distributors and figure out how all 20 million of us work together, what we read, where we go, who we follow, the underlying influencers, the underlying technology, the programs, the processes. There's just so much to dig into as names, faces, and places, and how this whole system works to drive $4.94 trillion in tech and telco this year.
It's an absolutely unbelievable opportunity in front of us that we're all actually a part of. And I know that you've been super busy lately. I think I counted 7 different blogs that you've given to and I'm going to say given, there's so much rich data, there's so much rich insight that you've provided for us since the beginning of the year. That's 7, so that's more than 1 a month. So keep it going. But I know that there's a massive team behind you at Canalys that you work with that are also visionary and thought leaderships in their own right, in their own segments. But what's something that's most when you think about what you're actually working on right now, and you think about what's the most exciting thing that you see happening in our industry right now?
Well, the most exciting thing is a different buyer. By the end of 2024, the majority buyer of tech and telco, the $5 trillion, businesses and governments, will be a millennial born after 1982. Different psychology, different buying behavior, different journey, a completely different animal that we need to think about and question, how they go through that buying cycle, how they build a team around them, the 7 people that really influence and support them through the different parts of that journey, how they execute. Really, for everything else rotates around the end client. And for the first time in 43 years, when you go through a major demographic shift, we have to shift ourselves and switch gears. Make sure that obviously what's worked with baby boomers, what's worked with Gen X, continues to work. But I'll say that there's an absolute 180-degree turn in many cases in terms of how this new buyer thinks and how they work.
Yeah, and it's something that I've definitely seen with the customers that we work across, vendors and distributors. And recently, I think the past 3-4 weeks, I've also been on the road a bit. We've had the AWS Summit that's moving across APJ at the moment. It was in Sydney a couple of weeks ago. Then we've had the Microsoft AI Innovation Roadshow, which has been a road trip around ANZ. So there's a lot happening. There's a massive amount of, we call inflection points, but I know you like to talk about this, but when I think about what's actually going on in our particular industry, we've got these macroeconomic conditions. We've got a complete change in how we are viewing the way technology, as you say, is bought, the way we engage with our customers. But we've got things like AI that is probably the biggest green light that is being shone on everyone in our particular industry as well. You're seeing people like Stripe, Kajabi, all these SaaS vendors starting to bring a massive amount of AI capability into this market. And if we look at our traditional distribution game, we look at our traditional buy-sell relationship that we have within the channel, I think what's top of mind for me and what I've heard back from channel and ecosystem leaders that I've been talking to on the road is that there's this theme of partner success. There's this theme of how can we be more successful with our partners? And I think if we start to break that out, partner success means a tremendous amount of things to everyone. But when we think about partner success, and I think about this as this is actually not just a vendor problem or a channel leader that sits at a cybersecurity vendor. It's actually an ecosystem problem. It's an ecosystem problem, and it actually stands in the way of our success in that $4.3 trillion opportunity that you talk about as well. So when you think about what's happening, and you've been on the road a bit, like what is happening in the channel and the ecosystems landscape right now? What are people struggling with? What are people actually double clicking on that you're seeing on the road right now?
Yeah, so we've got to engage at obviously the big ones you mentioned, AWS, Microsoft, and Google, at their biggest events that are bringing partners in from around the world. We've got to engage at the Salesforces, ServiceNows, Workdays, Marketos, HubSuites, etc. that from a SaaS perspective are bringing in their biggest partners. We're working with the biggest cybersecurity companies. There's 6,500 security tool makers, but this is the year of the platform, and we've been working with the top 20 of the largest in terms of forming these platforms and how that industry is going to progress. But suffice it to say, there is a whole partner success, partner experience element to this. And we've been on this early. We've been watching companies make changes. And these changes are something as simple as the language used. With 35,000 vendors in the world competing for partners' mindshare, 99% of them are still talking through the lens of margins. Resell my product and make, whatever percent margin, front and back end margin, and here's your market development funds. And by the way, if you sell enough of it, you'll be a gold or silver. We've been talking that way since August the 12th, 1981, where the leading companies, the ones that are growing the fastest, the ones that are valued the highest on stock markets, are speaking at a multiplier language. For every dollar that we sell, and again, it doesn't matter how it's sold. Today, our industry is 73.2% through the channel, through and with the channel. The fact of the matter is, whether it's sold on a marketplace, whether it's sold direct, doesn't matter. There's a whole new economics that we can talk about in terms of how that works. But forget that for a minute. Forget about making that 3% a margin and start talking about how you could make 300% of the deal. Working on a $100,000 deal, figure out as a services partner and an integration partner how you can go win in the 5, 6, 7 time multipliers And I'd rather be making 3 times the deal at 75% margin and not really spending too much time, navel gazing over what margin we're going to make if we happen to collect the customer's money on behalf of that vendor.
Yeah. And I think we look at the multiplier that you talk about, and it's quite rich in the hyperscaler ecosystems. There's some very clear multipliers that we talk about. I think Canalys did the AWS reInvent. We talk about the $6.3 per revenue from an AWS perspective. I think from a Microsoft perspective, it's closer to 10, give or take a couple of dollars around there. But there certainly is a significant opportunity right there for partners across the ecosystem. A question that's always been on my mind, though, is when we talk about the addressable market and we talk about how many, we kind of start to take our, let's call it 450,000 channel partners or IT technology partners, and you can correct me if I'm wrong here, because I'd love to get a little bit more insight here, which is we've got this massive wash of technology providers. You've got MSPs, you've got different business models, you've got ISVs. When we think about this in terms of the collective opportunity that sits across cybersecurity, artificial intelligence, cloud, disaster recovery, infrastructure, you name it, is every vendor actually working with the exact same pool of partners? Or do you see that there is an actual uniqueness around the types of partners that vendors are working with? Because the mind share, the attention seems to be very, very wide from vendors and not enough focus on a very subset or specialization of the partners. I'd love to get your view on that.
Yeah, just to close off the last question, Microsoft is $7.63. If you're an ISV, you can go over 10. AWS is $6.40. Salesforce is $6.19. HubSpot's $5.80. We've done work for Snowflake and VMware and HP. I mean, we could kind of talk about that multiplier, but we're down to the penny in terms of where the opportunity is. And that gets to your next question, which is today there are 20 business partner types. If you're seeing this on video, over my shoulder, there's a Venn diagram. And yes, that Microsoft channel that grew in the 1980s with IBM and then Compaq and Cisco, and that's almost 500,000 partners. Microsoft will say they have 470,000 partners today. But one interesting nuance to that group, which is right in the middle of my Venn diagram, is that there are now 335,000 partners in the world that have at least one managed contract. Managed services is now like a $548 billion industry. More than one out of every $10 that businesses and governments spend are on a managed contract. And if you look at the amount of MSP activity and those VARs moving into MSP land, there's a major shift. And that's coming out of telco. That's coming out of professional AV. It's coming out of, the retail point of sale channel. It's coming everywhere in terms of recognizing a different business model, a different way to surround the customer and add value every 30 days forever. But there are millions of other partners. Digital agencies, there's 200,000 digital agencies in the world. 78% of them are now tech services companies. There are 300,000 accounting and CPA firms, and 81% of them are now tech services companies. So every professional services company in the world, regardless of which 27 industries they're in or what they're focusing on in terms of a buyer, they're about 80% over now in terms of now tech services. They'll do the rest of the stuff they used to do, on page 4 of their website. They're lining up. That's on the right side of my, I guess on this side, left side of the Venn diagram. But you mentioned ISVs. There's now 250,000 ISVs. And because generative AI is now creating code, we're past the no code, low code stage. We're at the literally, here's my idea, go write me an application. You and I could create a new company today and then by Monday have it live and selling. So that 250,000 is quickly going to 1 million. If you look at emerging tech, IoT and AI, automation, blockchain, quantum, 3D printers, metaverse, whichever future you want to talk about, there's 800,000 companies there, hundreds of thousands of born in the cloud consultants. So there are 20 different partner types. competing. So that's millions of companies competing for the 7 slots around every buyer that makes up this $5 trillion industry.
Yes. When you start to paint it like that, you kind of go, definitely seems to be a massive amount of opportunity. But I think when we work with our customers, I think double clicking on where that opportunity lies for them, bringing in their customers, bringing in their skills, their capability around their particular partner channel, bringing in where they are with their particular partner channel. I think that to me is where the challenge, but also the opportunity is for them. So let's kind of shift gears a little bit, because we're competing for mind share, we're competing for attention. We know that channel and ecosystem leaders are really wanting to be a driver of partner impact at the end of the day. What are you seeing that some successful ecosystems and channels, what are they adopting when it comes to trying to deal with these particular channels surrounding the buyer, bringing the right motion of partners with the right capability to help deliver a value add? Because I think that's important. The partner role is a value add to the product or solution that our vendors are positioning, and not just a deployment or not just a transactional piece. So what are you seeing that successful ecosystem leaders are starting to adapt in this particular area?
Yeah, or you could say it that the products, the hardware and software products, are a value add to the services that the channel's providing.
Yeah.
It's reversed. Today, for every dollar of hardware and software in the world, there's $2 of services, and those services are outgrowing products. So the biggest partners are outgrowing the vendors that they represent. So I didn't really exactly answer your last question, so I'll do that now, and then it links to this answer.
Sure.
The answer is, if you look at the 7 people that surround the customer that they trust, there's no single throat to choke anymore. There's no trusted advisor. It's a group. It's a team sport. So when you look at the team, they're not looking for 7 VARs or 7 MSPs or 7 of something. They're looking for people that have different expertise. And here's how it works. I need somebody with expertise in my buyer type. I'm in marketing. This is my role. This is what I'm kind of doing. This is my, what I need to get accomplished, or I'm going to get laid off. I need somebody that's an expert with me. And by the way, that could be a digital agency that understands. They've been with me for 50 years. They built my website 20 years ago. They put me on the front page of SEO, Google, 10 years ago. And now I need them to, with the 13,080 MarTech and AdTech tools and the end of the cookie that we're facing off right now, I need that agency to help me through this. Now, I happen to be in a certain industry. I might be in one of the 297 sub-industries in Australia. So I need somebody that's an expert there. There's compliance, there's governance, there's regulation, all kinds of differences. I need somebody that's an expert in, Australia, because it's very different from New Zealand. It's very different than Singapore. It's very different than Japan. I need a geographic expert, again, for those compliance reasons, make sure that me or my boss doesn't end up in jail.
Yeah.
I need somebody that understands my segment. If I work with 200 colleagues, it's different than working with 2,000 and 20,000 and 200,000. And it's very different than working with 2 colleagues. So SMB alone has 6 different segments. So I need somebody that understands the particular challenges that I have on resourcing and what I can get accomplished. I need somebody that understands the 2,000 categories of hardware, software, and services. I need to bring in perhaps a cybersecurity expert. I need to bring in an expert on business and disaster recovery. So I need to, fill the room with somebody that's deep, deep, deep on the product side. And then finally, all the models that are swishing around. You have subscription and consumption models. You have product-led growth models. You have managed models and perpetual models. There's 20 different models. So am I going to consume this? Am I going to buy it on a marketplace? How is this all going to work? Is it going to be at the edge? Is it going to be hybrid? Is it going to be out in the cloud? How is Gen AI going to layer into this? So in that, there's just 6 segments right there in terms of how these buyers choose their teams. And that 6 or 7, or the 7 people that surround them don't compete. They're all after that multiplier dollar. But the multiplier comes down, and this is to your next question, the multiplier is very specific services. If you participate with the customer before the point of sale, you might be doing marketing to help them get educated. You might be doing consulting. You might be doing configure, price, quote. You could be doing design and architecture work. I mean, there's 50 services that you could be providing that you could be billing for at the point of sale. They're going to buy a 7-layer stack today.
Yeah.
They don't buy one product. I used to work at IBM where you couldn't get fired for buying IBM, and we were trying to be all things to all people. Well, today, the average deal size is 7 at the hyperscaler level, at the SaaS layer, at the security layer. It's always 7 distributors. You know, if you go talk to Dicker, if you go talk to NextGen or Ingram, I mean, they're selling 7 things on every invoice.
Yeah.
It's a stack, and an integration first buyer, who's now this millennial buyer, that's what they rank number 1 in their criteria. So you're in this world of stacking together 7 things with 7 different people and orchestrating all of that. That's a very different role for a partnership leader than what we would have had only a few years ago.
Yeah, absolutely. Absolutely. So what are you seeing, or where have you seen some successful ecosystem models that are being adapted to or moving towards trying to deal with these challenges and are being successful? What comes to mind for you?
You know, we've been confused a little bit because, 10 years ago, we might have read a blog that was software is eating the world. We might have been running around and telling people that, every company in the world is trying to become a tech company. And I'll tell you that all the pharmaceutical companies and the banks, insurance companies, auto companies that I've met aren't really kind of becoming tech companies. They're digital transforming to serve this new buyer, but they're still selling pharmaceutical drugs. They're still selling cars. They're still selling insurance products. That hasn't digitized. So the fact of the matter is they're actually not trying to become a technology company. They're trying to become a platform. Wall Street has been very specific for all global companies that if you want the big valuation, that big $1 trillion valuation, if you're now Microsoft, who's larger than Apple, if you want that big, Google or AWS, one of those big valuations. But if you're a SaaS company and you want to be valued in the hundreds of $1 billion, now you get into the Snowflakes of the world and the ServiceNows, and obviously Salesforce has gone well beyond that. But if you're in this mode, there's a degree of platform that you're trying to achieve. And everybody answers platform differently. We wrote a 91-pager earlier this year with HubSpot and partnership leaders defining what this really means tactically. Even last week, I wrote a 5,000-page, 13-part dissertation on what it actually means to be a partnership leader and build a platform company. But your tech people think it's just a big UI, UX, single pane of glass. Your CFO, is looking at the private equity or the public, favor that the share price will get. Your, CEO kind of thinks somewhere in between those two. Everybody thinks something different. A platform is really a degree of gravity where you are, you're having demand of services partners that have this multiplier opportunity. People who could make $2 or $3 or $4 for every dollar you make, they're lined up out your door because they recognize that opportunity. You have another lineup of people who are tech integration partners, using you to get into that 7-layer stack, using your marketplace to get tagged onto a deal, using your future credits for their revenue. That's what's happening with the hyperscalers right now. There's $341 billion of future credits sitting there that every company on the planet, whether you're a product or services, can take advantage of.
When you think about this platform piece, there's definitely, we think cybersecurity, this is probably one of the biggest areas where we're seeing a real shift in this platform thinking towards this, what you've just described as well.
Yeah, this is the year of the cybersecurity platform. Starting this year, we have 6,500 security tool makers, vendors around the world. And by the end of this year, we're going to have 4 to 5 platform players, much like you have in hyperscalers, much like you have in the lines of business with SaaS. You're going to have these super powerful platforms that run marketplaces, that run the integrations, that help customers into these 7-layer stacks, that get these trusted things put together. Again, an integration first buyer, wants that first. They'll buy a product 80% as good as the next one if it works better in their environment. So they're looking at these platforms. So what's happened in security is you obviously have these slots like, we believe Microsoft is going to grab one of those platform spots in security. With Splunk acquisition at Cisco, they're absolutely looking at taking one of those slots. Look at the success, for example, that CrowdStrike has had down under, and the growth numbers that they put up. They partnered with Zscaler and Okta to fill out the zero trust kind of SASE model, but they're absolutely gung ho on getting one of those platform spots. All Palo Alto is talking about now in the last 3 to 6 months is platform this and platform that, and they're eager to get one of those slots. I was at a Fortinet event, a week ago in Vegas. Every sign had platform written on it. So that's the talk, but you either get the platform spot and everybody works with you and the demand, the gravity comes into you. But at the same time, Palo Alto is going to have to work with Microsoft and Cisco and Google and AWS and other platforms where they're not. It's a parent-child thing.
Yeah.
They might be the biggest platform of their CISO buyer. But in the larger federal government CIO purchase, they might be a one-to-one click on one of those marketplaces behind consumption of infrastructure. So the channel leader has to be bifurcated in building this platform around the 6,000 others, ISVs, and then the customers, but at the same time going to figure out how to work with these trillion-dollar companies and be in that one-to-one click. And you already have companies like CrowdStrike, you have companies like Palo Alto and Splunk and Snowflake who have issued press releases that they're already selling $1 billion through AWS alone.
Yeah.
It's sent AWS now to be in the top 10 list of distributors worldwide. And they beat that prediction we made 2 years ago by about a year. So these things are happening faster than we can kind of track. But the fact this is changing the economics of partnering. It's changing how buyers, consume and subscribe to technology. And the partners that are on the front end of that and the partner leaders that are on the front end of this are having unbelievable, like double and triple digit success serving this new era of compute.
I want to talk about this. We was talking about kind of so we kind of go, platforms is where we're thinking or where we know the industry is heading in terms of consolidation and in terms of the changing ecosystem model, because the platform and ecosystem piece. But let's double click on this around this innovation piece, because there's one piece that's going to bring all of this together, and this is ecosystem management. And I know that you spend a lot of time. You've also got a couple of lovely infographics behind you there around ecosystem management, because we've got in a platform economy or platform economy, we've got revenue on the one side, and then the other side we've got this from a channel point of view, which is finding the revenue opportunity, but also then enabling partners to go after that particular revenue opportunity. And when we start to think platform within consolidation, what are you seeing is happening in the platform or in the ecosystem management space, which is absolutely critical for any channel and partnership leader that's looking at a platform type strategy?
Yeah. So one thing you said, platforms do not mean consolidation. Every time we've seen a platform established, the level of innovation and the level of planets surrounding that gravity, that sun, explode.
Okay.
And when the platforms were created in marketing, like Eloqua and Marketo and Pardot and HubSpot, those 4 platforms became the first layer of the 7-layer stack. Every year we've added 1,000 to 2,000 MarTech and AdTech companies to the point now we have over 13,000 of them. No consolidation. It's a bigger 7-layer stack, soon to be an 8-layer stack, soon to be a 9-layer stack. It's the opposite of, we're going from 250,000 to 1 million ISVs. AWS, same thing is happening at that level, and security, the same thing's going to happen there. There's going to be another couple thousand tool makers in the next couple of years thinking they can be layer 7 or layer 8 of a zero trust SASE deal. So it doesn't mean consolidation. It means the exact opposite. It drives innovation. So this is happening in the channel tech stack over my shoulder. Is for 40 years, we were building technology to kind of measure, monitor, manage linear tier 1, tier 2 channel models, which are kind of distribution-led channels of distribution strategies. People who collect money on behalf of us and how to make sure that all the 100 elements of education and training and motivation, incentives, loyalty, and long going, co-marketing through to and with channel marketing, all the things that plumbed this industry for 40 years. And today is 73% of our industry. I mean, it's a critical component to every company's TAM is to make sure you've got the resell part of it figured out. But now the 6 of the 7 partners who don't resell either co-sell, co-market, they co-develop, they co-innovate, they co-something. But in that, they don't trigger a transaction, which doesn't trigger money. So looking to support a partner that doesn't transact is a completely different mindset. And there's nowhere in 99% of the vendors that are out there that there is money available to invest in those co-innovation partners and co-development in front of a new technology integration buyer, which is absolutely ludicrous. But you ask, like, what differentiates a winner from a loser? A strong, they've invested in these non-transacting transacting modes. They've invested in co-sell and co-marketing, all these things that will take us there. The other thing is that you kind of look wider on the peripheral and understand how these partners engage, where they engage, how they engage. The more you learn about how this all works and you share data, there's 5 new islands of innovation that come for non-transacting partners. If I want to measure those 28 moments before my customer makes a decision, well, in the past, I would go buy the data from Facebook, Cambridge Analytica. I'd go buy the data from Google. We're the products on the internet. Everything we do, including talking to our wife in our kitchen, is recorded by Alexa. Everything is there to be bought. That's why you see an ad for whatever you were just talking about, 5 minutes later on social media. Well, that stops soon. Google's just kind of finishing that off and being nudged into doing that. So in those 28 moments, you're going to have to go partner with each of those 28 moment owners. And plot twist, these are potential partners of yours that you've just never considered as partners before. They could be affiliates, affinity, advocates, ambassadors, influencers. This is the Kim Kardashianization of the channel. If you wrote an ebook that could nudge my customer forward, if you recorded this podcast, it could nudge my customer forward. If you ran a Chamber of Commerce event that nudges my customer forward, I would like to partner with you. I'd like to share that data, compare data. So when they come to me and when they come to you, we're going to see these moments. And if we do that effectively earlier in the journey, you win more deals if you see them earlier in the journey. The better we orchestrate digital or digital only moments, the better we integrate all that through the 28 are going to be the winners going forward. So there's 5 layers of technology already available to serve those 28 non-transacting moments.
It's absolutely, and then we start to think about, well, we've got to touch on marketplace, because I think platform, marketplace, and what's happening in the ecosystem is absolutely paramount to reaching those customers and bringing in that buyer experience. So, but there's this mind share and attention that we're constantly trying to draw from this ecosystem, from channel partners, to see the opportunity, to see these moments and line up behind these moments. And I kind of feel like what's happening in the larger, let's talk about the AWSs of the world and the Microsofts and the Googles, that there's actually this line in the sand. This is the line in the sand in terms of what we're prepared to invest in to now move this platform economy, to now move towards marketplaces. And there is a huge unwash of partners that just aren't ready to either take that step forward or just aren't relevant there either. So in your opinion, do you see this as a cleansing out of the next wave of the types of technology partners that we're going to see service this opportunity? Or do you think that there is a way in which these partners can come through as well?
Well, I think all good entrepreneurs make the moves necessary, make the pivots necessary. Right now, they're facing a pretty extraordinary time in economics of partnering, and it was driven out of the marketplaces. So first of all, marketplaces are growing at 86% compounded. It's unbelievable. I've talked about AWS and a few of the big things, reaching the levels of top 10 distributor worldwide and things like that. So what's happening in between that is the new buyer, digital first, digital only, subscription consumption based. So when you're actually transacting today, it's only for the first 30 days. And then every 30 days after that is kind of a renewal or upsell enrichment opportunity. So it's not really buying the $1 million thing anymore. It's $9,000 a month forever. And you don't, buy Netflix from your cable guy in the white van. You don't buy Spotify. You don't buy a subscription to your toothbrush. Like, you buy it in a digital marketplace. The interesting thing about digital marketplaces, though, at Microsoft, at Google, at AWS, 30% of the deals that go through there are actually partners clicking buy on behalf of the customer. So one thing that marketplaces did, Microsoft did it first, Google did it second, AWS just followed, is drop the fees to 3% or less. The cost of working through a marketplace, of changing money for a vendor, the cost of resell has finally been answered, is the same as a credit card swipe at a restaurant. Visa or MasterCard will charge you 3% or charge the restaurant 3%. Well, Microsoft, AWS, and Google will charge you 3% or less. So if you happen to be a pure reseller, the act of taking money on behalf of a vendor, taking on the risk that the customer's not going to pay. If you happen to be a Microsoft partner, taking on the risk that you're going to have to pay out the rest of their contract. Not only are they not paying, but you have to pay it out. Also taking on the time value cost of money, net 30, net 60, net 90, waiting for them to pay. Today's interest rates and inflation, everything else, like, cost of money's growing as an expense. The cost in the end of not collecting and having to go hire BIF to break knees, that entire cycle in the 1980s, we thought was 40%. In the 90s, we thought it was 30. Now we think it's kind of maybe 20, unless you're, kind of a niche, it's higher. But that entire gross to nets is now being offered a different way. Only 3% of that has to go to the actual changing of money. 20% in private offers, multi-partner offers, and a whole level of technology now that you can still pay that out, but pay it for the non-transactional moments. That consultant that brought that deal home, the design architect that brought the deal home, that early stage marketeer, like, go pay them $5 for that ebook. Start spreading the money like peanut butter, and you're going to have the tools available in the marketplace to successfully do that when you can kind of extract from that point of sale. That's what's happening. Microsoft was the first to the point system, and we're working with dozens of other companies right now rolling out their point systems to say that, the whole point of sale, the 43 years later, we kind of know the answer. And if you happen to be only a reseller today, just understand that every vendor that you have is on course over the next 10 to 15 years, perhaps, to roll whatever margins you have today to 3. It's going to be a road to 3.
Yeah, absolutely.
For resellers, which when you were making 40% margin, you gave away the consulting for free, the implementation for free. You gave away so much for free because the richness was in the deal. When the richness isn't in the deal, you're going to have to go figure out how to be a mini Accenture and charge for that consulting, charge for that implementation. And every time you roll a truck, every time you pick up the phone, everything you do with that client. And by the way, this new buyer is okay with it. They understand you don't work for free. You got to pay your mortgage, and you have kids, probably go to the same school as their kids. So in the end, though, they want just a digital way to see that, this is how much you work per hour. This is how much the contracts cost. This is how much the managed services are. I just want a good picture of everything at a detail level. Don't give me this whole big number anymore.
Yeah.
And this is where distributors have to start playing in that as well. They have to come out of hiding. There's a wonderful value behind the scenes, but the new buyer hates white labeled stuff. The new buyer is really smart. They can go on LinkedIn and see as a partner you have 7 people. Not only that, they can read the resumes of all 7 people. So when your website's talking about zero trust and all this wonderful MDR and XDR, this great, I know that none of your employees are staying up 24/7 watching my network. So bring to the table who's standing behind you. I know the products don't just show up, drop, shipped, and configured. Bring to the table who made that happen. That's the group of 7. I don't want anybody to be behind anybody else, white labeled. In an ecosystem, no one hides. And the marketplace is the place that's breaking down that menu for them to the penny.
Yeah, absolutely. And it's this role of the channel part, the traditional channel, transactional channel partner in this marketplace, which I absolutely see as critical to being able to service the opportunity with the buyer. But there is a there is a lot to be done in this traditional channel model of understanding the economics of the marketplace, the buying patterns of the marketplace, and how they actually deliver value in that marketplace. And I know from an AWS research that Canalys did, where AWS customers, was that 83% in terms of specialization? They will ask, they look for that specialization. Who is not just standing behind me, but who's actually got the skills and can do what they say they can do as well?
Yeah, there's two numbers that went to that. The second one's more surprising than 83. 83 was the how important are certifications, competencies, really working with your vendors program and to show your success. And, one of the spots that really exposed this was generative AI. Because it was a year ago today that it became a consumer trend, and we all quickly had to go get really smart because our friends and neighbors and clients started asking. But I'll tell you, no one in the world has a university degree in generative AI. No one has, 10 years of experience in generative AI, because other than working on Watson beating Jeopardy, 15 years ago, unless you were on that particular team, you don't have that kind of resume. So now customers with all these new technologies, new security, new managed services, new Gen AI, all these things are happening. I understand that we're not going to have master's degrees in this. I need to show your people and see the skills that. So not only the 83 now have this as a top criteria, the most surprising thing to the research was 73% go back and check more than once a year. So we thought, it's important. You're going to make a decision and then you kind of set it and forget it. No, you're going to go back every 6 months because some of these things are so new. Make sure that you're updating your skills. Make sure you're at the latest version. I see you got certified for ChatGPT version 3.5. Well, 4.0 has been on the market now for 3 months.
Oh, it's coming.
And 3.5, passed the bar exam in the bottom 10%. 4.0 passed the bar exam in the top 10%. And the latest version of ChatGPT is now writing the bar exam. So in that version, I don't need your skills from 2 months ago. I need your skills now. So the customers are literally on AWS's site, Microsoft and others, Salesforce, checking your credentials and making sure you're going back to school to make sure that you're just up to the latest level.
Yeah, exactly. Yeah, absolutely. And so let's kind of bring this together from we've got a lot of trends happening. We've absolutely got this platform economy, marketplaces driving a bunch of differentiation, but also competition as well. Let's look at the leadership traits. So when you think about partner, channel, and ecosystem leaders that are playing in this economy right now, what are some of the leadership traits that you see really important? Let's call them leadership traits or mindsets that partnership leaders should be thinking about and channel and ecosystem leaders should be paying attention to be able to make the shift and turn this into an unbelievable opportunity for them.
Yeah, I mean, from a leadership perspective, the modern company, and I'm not talking a small security company now, we're talking enterprise level vendors right up to the Fortune 100, should have a chief partner officer in place. That chief partner officer should have at least six vice presidents at this point. They should have a vice president of channel marketing, the 28 moments, and putting in a tech stack that can work together with partners to unearth, MQLs earlier and get them over to the sales team. You should have a traditional channel chief that has, 20 or 30 years of hitting their numbers every week, every month, every quarter, gold, silver, bronze driven, absolute terror on the sales side, making sure that you're driving those numbers. The third executive is the head of customer or partner success, which is every 30 days forever to make sure our retention rate's 108%, which is the magic number to get the big valuation. Make sure that for every customer we lose, we're doubling up every other customer. We're enriching, we're upselling, we're cross-selling. We've got a channel built, the 7 people built around a customer for life. That's my third executive. My fourth one's the head of technology integrations. So I have an integration first buyer. I want, if I'm a MarTech, I want 13,000 integrations. If I'm a security. I want 6,500 integrations, and I need 100 or 200 new ones each month as new ones pop up. I need that gravity. That's my fourth executive. I need a strategic alliances. Who's out playing with, the bigger players? Because again, you'll be platformed to your buyer, but you'll be participating with AWS and Microsoft and others at a galactic scale. So I need somebody that understands those ecosystems, understands the marketplaces, understands our positioning there. And then my sixth and final executive is a business alliance leader. So I need to walk into the doors of Accenture and Deloitte and CAP and KPMG. I need to E&Y. I need to walk into the doors of the major ISVs. I need to craft these co-sell and co-marketing. That's 6 vice presidents. Only one of them is focused on resell.
Those are some big companies, but we're also trying to, and I suppose that's why some organizations like partnership leaders exist, because there needs to be a place for people that aren't for organizations that are just early stage as well, building and formulating those 6 roles that you talk about. So
and maybe it should be like IBM, and they should only hire Australians in those roles.
Yeah, maybe. Jay, it's been an absolute pleasure having you on the Investible Partnerships podcast. I think just the data and insights that ground your thought leadership that you bring to this industry is something that I think for my listeners and for everyone in our industry, absolutely super grateful for you and what you do, and the team at Canalys as well. Unbelievable. So I like to end the podcast a little bit differently, and we call this the Partnerships Fast 5. So it's really simple, really easy. I'm going to go and give you 5 statements, 5 questions or statements, and I just want you to think about the first word that comes to your mind when I say the statement as well. You don't have to give me a reason at all about that as well. Okay, cool. So first one, partnerships thrive on
collaboration.
Partnerships embody
trust.
Through partnerships, you can
succeed.
Partnerships spark
innovation.
And partnerships succeed through
joint success.
Joint success. Love it. Partnerships Fast 5 done there. Jay, again, thank you so much. I've really enjoyed the conversation. I know our listeners and our growing listener base on the Investible Partnerships podcast absolutely will. For our listeners who aren't yet following you, what is the best way they can get these rich insights from you and the broader Canalys team as well?
Yeah. So, LinkedIn is probably the first. You said 7 major reports. We're talking like 5,000 word reports. Every day or every other day, I'm sharing research from around the world that is more transactional type of research. So there's a daily conversation, but there's a newsletter that goes deeper into these daily trends there. But if you want to send me X, Twitter, if you want to get me on Facebook, you want to send me an email. I've got 20 windows open here, so I probably can get to me anyway.
Look, you get to you, and you absolutely. I think you're definitely someone who gives a lot back to the industry as well. I've loved the conversations we've had outside of what we're doing every day. And are you going to be at the Canalys Forums events? I'm sure. So, am I going to see you in Bali later in December?
I will be in Bali in December. I'll be in Berlin in October. I'll be in Miami, my hometown, also in October. But like everything else, Channel Futures, Channel Partners Expo is our sister company under Informa. So I'll be there. Black Hat is also our sister company now. So we've got all kinds of places that we're going to be going and telling this channel partner story.
Love it. And thank you so much for sharing it with our audience, Jay. Really appreciate it.
All right. Take care.
Thank you for listening to Investible Partnerships. Subscribe wherever you listen and visit investablepartnerships.com for the transcripts of today's show.